Hello. We have a good one for you today. So we need to talk about what's going to be happening this week. Also, what did we see last week from institutions getting into Bitcoin? And why is it that we are seeing a current pump in the market? So 98% of the NASDAQ opened up. No, sorry, the 98% of all US stocks opened up in a positive. And now the NASDAQ is up by 3%. What does this mean for Bitcoin? What are we looking forward to later on this week? Let's find out. So first things first, I'm not going to start with this. I will start over here. Just a quick notice. Bank of Canada sees worst drop in business sentiment since 2000. Doesn't really affect us too much. You can see over here, though, S&P 500 up by 2.5%. Well, over. NASDAQ up by 3.27% at the moment. 338 points, which is good. And it's still rallying. It's still rallying. So big things that we have to look out for this week. So I say the last like 2 weeks, tech has been a little bit disappointing when we've come to this earnings season. So this gave us very much a bearish view going like, well, if tech is down, then we might as well just kind of all sell and be a little bit scared. And that wasn't the case last week, especially towards the end of the week. And I think that's why we are now looking at having quite a lot of tech reporting, the likes of Snapchat, for example, got Netflix in there as well. And so having these different companies are all coming out with their earnings has given a bit of positivity and I guess a positive sentiment. So you can see there's an awful lot going on at the moment. And we did have some of the financial institutions. These will be making a ton of money, by the way, guys. So yes, the interest rate is going up, but then this means that they charge more whenever you want to borrow money. So if you want to borrow money, they're going to be making a 7% return instead of like a 0.1% return on their money. Okay, so bear that in mind. Financial sector could be a really good indication if you're into just normal stocks. We're mainly into crypto here, right? So we're looking at this week. There's not really any major bits of news, to be honest. This is one thing I want to show you. We will see kind of I guess more of a drive towards the standard issue. DXY probably pulling a little bit to the downside. And I think we might be seeing a bit of a rally this week, okay? This is just my thoughts. I'll share with you exactly why. So, one sec, let me bring this up. So, look, as I said, looking down, Canada, core inflation coming out later in a couple of days. But then, Australia, China. It is interesting, actually, because I think with China, we're going to be able to see, and this is going to be very true when we have GDP growth, we're going to actually be able to see what the real overall sentiment is. I know a lot of people are talking about how they're destined, not just maybe, they're destined to crash and burn quite aggressively. So we're going to see whether this is actually true over the next couple of days. 5 things that we need to know to start the day. I've highlighted a couple. So jumbo rate hike. The St. Louis Fed President, James Bullard, left open the possibility that the central bank would raise interest rates, not by 75 basis points once, but do it twice in both November and December, which again is something that is extremely bearish. And so I think this, for me anyway, it paints an overall bearish picture, not in the short term, but in the longer term. We're still fairly negative. And obviously the pound is now getting a bit of a recovery because of Liz Truss. Everyone's like, but investors are looking beyond a looming global recession and they see the US and its financial markets emerging strongest on the other side. Then looking at what's happening right now. No, I'm covering off the stock market. Everyone's probably like, shut up, go away, give me some crypto, but it's coming. It is coming. So 98, as I said, 98% of US equity benchmark companies rose on Monday. The market measure bouncing from a close below its 200-week moving average, which is good. And if you're a trader, if you look at 200 moving average, very key level. So if you close below, you're kind of looking for another confirmation that you want to continue that trend to the downside. Okay. If you don't get that, you go, it could be a fake out below the 200 moving average to which we bounce ahead. Or this could be it's a breakout or it's a fake out. Only time will tell. But anyway, US Treasury yields have dropped along with the dollar. Morgan Stanley long-term equities bears say US stocks are ripe for a short-term rally in the absence of an earnings capitulation. Like I said, the earnings situation does seem pretty good, and that's what we had last week. So we might see, if everyone's not worried about earnings, then it could be good. But he said, yeah, 25% slump of the S&P has left it testing a serious floor of support. Wilkins said he would not rule out an S&P 500 rising to about 4,150 points, which is a 16% increase from its latest close. While that seems like an awfully big move, it would be in line with bear market rallies this year and prior ones, while retaining his overall negative long-term stance on equities, which is meaning he's like, right, okay, we might see a bit of a jump, and this could be great. We've already seen 3% today, so okay, doesn't seem crazy, but overall we're still negative. And I wanted to show you this that we posted early on today. So last week, retail traders bought $19.9 billion worth of puts to open, and they bought only 6.5 in calls to open. Basically, a put is like, hey guys, I'm going to put this to the market, and if someone wants to sell it, then fantastic. I'm put it to the market, and if someone wants to buy it, then fantastic. A call is like, hey, can I buy this stock? So it's to do with like derivatives and futures, etc. But yeah, you give it's it's an option. So you have the ability to either they say, look guys, there's a lot more short interest is a better way to put it, which does make me believe that this is more of a fake out instead of a full market correction and turnaround where everything now we're going to see Bitcoin 100K. I see people getting a little bit too enthusiastic for my liking, because we do have this very simple data. Okay, this is the first time in history that we were 3 times calls. Okay, because obviously this number times by 3 is lower than this number. So we have this, and so again, just to reiterate, 75 basis point hike in November. Chance of this, now that the market's open, I'll actually refresh this. See, it might actually change. I think it probably will change in December. It hasn't really changed too much, to be honest. So yeah, still basically looking at 75 basis point coming up in November and a 75 basis point coming up in December. Don't know why that slipped my mind. Obviously, the guys from St. Louis, and they are kind of like, I guess some of the main guys who work on these summary of economic projections. This hasn't really changed too much. We're still at the end of this year as the median looking for a 4.4, but obviously they've kind of corrected themselves and they're like, look, guys, it's likely to be this. Anyway, I want to get into some crypto. So what did we see last week for the old cryptorinos? We saw 8.5 million or over 8.5 million go into Bitcoin, and the majority of it came in via ProShares, which is an institutional way in which you can buy crypto. So yeah, Ethereum losing money. Interesting, the institutions were putting money into Bitcoin in the same week that we had the likes of JP Morgan come out and just be like, look guys, there's a massive threat to crypto because as everything keeps dropping, crypto's going to die. It's basically what it came out to say. But yeah, an overview. So inflows totaling 12 mil last year, and AUM are now out of hodlers or lost coins just reached a 50-year high. It's all these financial markets. I'm not used to markets being so new. Reached a 5-year high of 7.5 million Bitcoin, basically. So a lot of people holding their coins, or everyone just lost their head and suddenly can't remember anything about what their address is. But this is obviously going to be at these prices. People are like, look, I might as well just stick in it for the long haul. And I think we are seeing a lot of people buy up coins, which is a very positive thing for the likes of us. Yeah, hodler's gone. Let's give him a nice little nice like on that comment. Looking at and this is slightly worrying, I will say. Again, it's a slightly longer term. It's not like what's going to happen today, tomorrow. We're looking at maybe in like a couple of weeks, something like this. Brought up very well by Matthew Hyland here on Twitter, 2018, 2022. And obviously you can see the RSI doing something very similar in both of these occasions. So I think this is something maybe we can look at with AJ again in a little bit more detail, but you can see the vast similarities of what we're seeing here. We did come down from pretty much like a bearish flag. I mean, like a small bear flag, I guess. into this. And so this was more of a dramatic drop. This was more gradual, so kind of showed, but it's that this ability to be able to break up above certain levels and have volume to really stick there. And that's another thing, that volume is massively important at the moment. I believe this is okay. I don't have the exact volume yet. Another really good piece of information I wanted to bring to you by Delphi Digital. They often do like reports and stuff like this. The Bitcoin Historical Volatility Index, BVOL, has seen low volatility readings as of late. And that's the thing, there is very low volatility. And when there's low volatility and low volume, you eventually do get an explosion of volatility. Which direction? We don't know, you know. But there is typically, he says it here, historically speaking, when the BVOL falls below a value of 25, which is this white line here, a large spike in volatility tends to follow shortly after. So we are expecting, like I said, a big move, but the question is to which direction? That we're not entirely sure. And we can see here previously it was to the upside. Here it was to the downside. And so here, the upside, please, I hope. And then looking at equity, is again moving on to equities. It's a very similar picture. Equity volatility relative to Bitcoin volatility, BVOL, is approaching all-time highs. This shows just how much volatility compression Bitcoin is currently experiencing. And this is this compression where I think we're going to see a massive explosion in one of two ways. Obviously, you don't have a massive explosion to the sideways, like, well, it's up or down. So these are like really good indicators for us to show that something is brewing. Something's absolutely brewing. The question is, what are we looking at? I'm just going to finish up here, guys. Keep it relatively short. But I want to mention the EU sanctions on crypto exchanges and their Russian clients, because obviously and I mentioned this before, guys, if you remember, everybody is like, okay, Bitcoin's a new world reserve currency. Well, yeah, it can be. It absolutely can be. Like, as long as there's enough computers to support it, it can be. But governments are going to want to stop crypto, because if, I don't know, Russia can still buy microchips to put into advanced weapons, then they can still target, they can still do very targeted attacks on either Ukrainian stuff, or if they go to war with Russia, if they go to war with NATO, to like the middle of particular capitals and stuff like this. So obviously, in a war, you want to have your enemy using as bad accurate or as low accuracy weapons as possible. And so in order to make stuff work, they need to have microchips. And so if Russia can still buy microchips or arms or whatever they need from the likes of Iran or from North Korea, well, if they want it, they can just use crypto, right? Because you don't have to use the financial system to do that. And that's why everyone's like, but obviously this is an issue. So looking at this, what we have seen, or what you guys have seen, I haven't seen it because I've got something in my eye. But what we can see as the overall gist of this article is basically a prohibition of all crypto asset wallets, accounts, and custody services, irrespective of the amount in the wallet, has now been initiated by the EU. So that's basically, do you have a wallet? Have you got an account? Have you got any money? It doesn't even matter. Everything's shut down. See you later. So then another point is, it's worth noting that previous sanctions had limited cryptocurrency payments between Russia and EU wallets to around 10,000 euros. Okay, and this is because if your money is in, I don't know, let's say they sanction it and they say, hey, you can't get access to your UK bank account from Russia. You could just change your money into crypto and you can send it into Russia so you can still live. And so a whole host of cryptocurrency exchanges popular in the region, including local Bitcoins, crypto.com and blockchain.com, emailed their customers and said, look, withdraw your funds as soon as possible. We will be unable to make use of you. You'll be unable to make use of your service. Local Bitcoins accounted for a whopping 8%. I think that's a typo. They accounted for a whopping 80% of Russia's crypto trade volume. the exchange's largest client base by far. Moreover, and obviously, and so moreover, before the ban, Russia users were responsible for facilitating just 20% of all Bitcoin trading volumes on the exchange. So I think that obviously now that some of these have been sanctioned, essentially, like that's kind of the way it is. They're now seeing a massive drop. Okay, and that's obviously there's two ways to think about it because we can look at this, and I'm going to go through this specific section in a minute. But before I do, we can look at this in two ways because you're an exchange. You believe in crypto. You believe in decentralization. You believe in not having or giving someone the ability to stop who it is that they send money to or from. It's your crypto. It's your money. You do whatever you want with it. This is the freedom. But obviously, some countries don't like freedom, even if it is through crypto. But looking here, we have some defiance. We have some people sticking up for decentralization and also the ability to just do whatever you want. Freedom, transparency, even if you're the Russian government. So let me point this out. And I will say, there's obviously a massive disconnect. I'm not saying that like Putin himself has a Binance account that he's buying weapons with. But there's a lot of everyday people who can't facilitate banking in Russia because of external banks being closed down or being Russia being cut out of the SWIFT system. All of these different things. There's a lot of just normal Russian people who are being affected and kind of need to use crypto to some degree. So as highlighted previously, even though Binance is still considering limiting its services of Russian users, it's currently operating as per usual. Similarly, US-based exchange Kraken has not laid any impositions to its Russian clients, with there being no indication as to whether or not it decides to voluntarily adopt EU requirements, because this is one thing. These are EU restrictions. They're not American restrictions. Another popular exchange has yet to initiate any sort of ban in Antigua and Barbuda-based FTX. The same has been the case for the popular Russian crypto platform Garantex. So we are seeing a lot of pushback. Because obviously, if you're FTX, where are you based? Oh, I'm in Antigua, so I'll follow the rules in Antigua. But do you have to follow them in the EU? I don't know. This is going to be a big question. Is the EU now going to sanction or, let's say put restrictions on the likes of FTX if they want to open up a new branch in Germany or something? So this is something we have to think about in the future. But other platforms operating in the region, including Huobi, OKX, KuCoin, and MECX Global, probably global. In fact, Singapore, maybe, yeah. So these are still operating. Huobi, OKX, KuCoin, and MECX, and also Bybit. But they have gone a step further and told a crypto outlet that it will continue to stand by its ethos of freedom, transparency, and decentralization and not impose any sanctions against Russian clients. This obviously flies in the face of what the EU wants. So is the EU going to be very restrictive on the like of Bybit? This is where I think we're having the real test of the use case of crypto. Because although, we have a blockchain, it has to be supported, it has to be maintained, there has to be people working on it. It also has to operate under government rules. And so, if, let's say, Singapore said, hey, Bybit, you have to do this, they would have to do it or they would be shut down. So this is where we really have that question of, it's good to be pro-crypto, but it's bad to be anti-government, which I know sounds weird. But I've always said this, crypto is not going to be a standalone thing where we just say, hey, we don't need the government anymore. We don't need banks. We're always going to need them, but we need to think of different ways that we can integrate the two systems together, which is really tough. But that will be the, probably $1 trillion question, I would say. And so lastly, it should be noted that UK-based crypto exchange Exmo, which is extremely popular across the Eastern Europe, recently sold its Russian business to a local vendor earlier this year. So they're still going to be able to, Russia will still have crypto exchanges, etc. And so it still, basically remains operational in Russia and its neighboring nations of Belarus, Kazakhstan, etc. which obviously, when the EU's coming in and being like, "Ah, you can't use, you can't use blah 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 blah." Like, okay, great, but even though we can't use, what is it? Who? Even though you can't use local bitcoins, crypto.com or blockchain.com, you still have plenty others. So there's always going to be something there. And just to kind of bring into wrapping this up, this whole question of working together with the traditional financial market guys, because we're going to have to work with central banks. Crypto's going to have to work with, just established companies, and that's, we want to think of it as like the next new thing. But unfortunately, the current infrastructure is so deep rooted that it's just so much easier. And to be honest, it's going to be very expensive to go against these guys because they already have a lot more money than most of us crypto boys, even the big developers. But Mastercard is to address pent up demand by offering banks an easy way into crypto, which is good news. We like this. So, okay, just this subtitle here. Mastercard's program will assist banks with crypto trading, regulatory compliance, and meeting security requirements. So again, it's something that, like, if you are in a particular place, you will have to, be regulatory compliant, etc. So a little bit boring, but they have recognized that there's a pent up demand. So offering a turnkey solution for banks to meet the crypto trading demands of customers, which is actually really good. Being able to go to banks and say, look, guys, we know that your people want this. We can give them a card like crypto.com, for example, where they can use and trade and buy everything, their current crypto holdings. So I do think we're going to see a lot more of this, but it's also potentially a way for Mastercard to be like, look, these guys, you are the bank, we are the one who does transactions. There's crypto, and all these like weird crypto boys up here, but then the exchanges are making loads of money. Why don't we just, instead of like fiat coming into your bank and then us doing the transactions, why doesn't crypto come into your bank? And then we still have the same system. It's just that now you're handling crypto instead of handling fiat. So there's still going to be the same level of control here, which is a worry. It's a worry. But I think this is going to be what will take off, because you still have that fringe, I guess, group of people on the side who are exclusively crypto, and we don't want the likes of JP Morgan, being able to freeze our accounts and stuff like this. And so we will want, that type of Bybit mentality of saying, look, we stand up for transparency, decentralization, freedom, etc. So we're not going to sanction anyone. But I think the majority of people, they'll be like, well, I already use my bank and I already use this. So if I can do crypto with these two, why don't I? Well, obviously I will. So that will take off, unfortunately. But yeah, anyway, that's it. I've been going 23 minutes. Jesus. It has been really good. I have enjoyed it massively. If you have enjoyed it, click the like button down below. It's free and it really helps me out. So make sure you do that. And I will be back tomorrow with another stream. Thank you very much, guys. See you tomorrow.